Welcome to the stage. Come on, guys. Come and have this conversation. And he'll explain Opti is not a small boat you learn to sail on, but that's another story. All right, Doc, yes, you have to sit in order. And well done to my desk for getting Richard's picture up in time. That's innovation for you.
I know, well
Right,
done.
one more quick clap. Welcome to our wonderful panel.
Thank you. Hope you're all caffeinated nicely after some afternoon tea and ready for the home stretch with the fun bunch. We want to talk about overcoming barriers to shared technology in Australia between fintechs and financial institutions, as well as barriers to partnering with large incumbents and institutions more broadly. I think sort of territory we want to cover as well. It's actually a really important topic for fintechs because a lot of fintechs actually have B2B business models, and so being able to successfully set up these partnerships is actually critical to their success, but also the success as a sector more broadly. So that's why it's something that we are really passionate about and really want to dig into. Having said that, when we had our prep call last week, it was about one of the most rogue briefing calls that I've ever had, so this could go anywhere. It will be fun. But maybe before we get stuck in, I'll just give a little bit more in terms of the intros so that you kind of know the backgrounds of everybody's here. So yes, Anthony, founder and CEO of Timely, which is an AI-driven platform technology company, so very relevant to this conversation, based in Adelaide, is that right? Yep. Go for the Crows?
Absolutely.
Okay. Which is all about sort of digital fulfillment, financial assessment and credit automation, and then you've also got 30 plus years in financial services outside of that as well. Next to him, we have Aaron Violi, Chief Opposition Whip and federal member for Casey, of course, elected to Parliament in 2022, and I think the youngest Chief Whipper in 50 years, which is very impressive. And then before that, you had worked in the startup world in Toronto, so you've also sort of got that lens around startup and tech as well. And then we have our wonderful Richard Miller, the CEO of Opti. Thank you for stepping in after Rob was not able to make it. So very, very generous of you. You also, before that, was the co-founder of Connect ID, which is an accredited identity exchange, which most of you would be familiar with, and also have spent some time in the banking space with a couple of years at NAB. So you have that experience as well, which we will definitely drill into. And then before that, you were, or maybe in between that, you spent some time as a partner in Monitor Deloitte, which is where I live. So thank you, everyone. And then just super quick, in terms of my background, I'm currently at Innovation and Ventures in the strategy part of Deloitte Consulting. Before that, I was a fintech founder and on the board of FinTech Australia. So I've also experienced this side of things from a number of different areas. So that's the crew. Let's get stuck in, hey, and Anthony, I might start with you since you're the reason why we're all here, since you proposed the topic. Can you give us, what do you think are the biggest challenges that fintechs face in working with financial institutions, either from that tech or that more broader platform partnership perspective?
Thanks, Carla. I think the core of the issue we're talking about here is in a market of 26, 27 million people, everyone seems to want to build their own roads. So at its core, if you look at some of the more commercially savvy, innovative markets, the US is a great example. 70% of mortgage flow, for example, goes through two platforms. They're not building their own roads. They're focused on leveraging the benefits that come from using shared capability to serve customers and using brand and other things to differentiate. And I just think that in Australia it makes a lot of sense, particularly when we have a quite oligopolistic structured financial services and insurance sectors, where we have a few very large players, that certainly at least the rest should be leveraging shared infrastructure of all types to effectively help serve their customers and actually, frankly, generate and create enough capital to compete in the long term. Otherwise, they will, frankly, not survive. And I think it's really important that the Australian consumer benefits from that competition, that those organisations can serve their markets and communities for as long as possible. And a very wise ex-bank CEO said to me at lunch today, well, the big always get bigger. And that's true, but actually shared infrastructure is one way that we can have more extensive and diverse competition in the Australian market across a whole range of relevant verticals. I'm not specific in this philosophy. I just think that's why I'm passionate about this topic, because I think it's worth us talking about and trying to work on how we create the awareness that actually leads to more shared infrastructure becoming prevalent in this market.
How does that work, though, from a competition perspective, if everybody's got one or two shared services as opposed to potentially being encouraged to partner with anyone and potentially having then 10 potential players out there in the market? How does that work?
Well, I think there's a balance. You don't want one, but you don't want so many that there's no scale advantage of that shared infrastructure.
Or none because they're building it themselves.
Or none because they tried to build it themselves and they couldn't afford it or didn't have the capability, and then they've lost their market relevance completely, and that market share's flowed to the oligopolistic structure that exists in so many other verticals in the Australian market.
Yeah. Okay. So, Aaron, maybe a question for you. Why is this an important thing for you in terms of why is it important that we address some of these issues and some of these significant challenges that we're seeing?
Yeah, I think the reason it's so important is just at a basic economic principle, competition is good. Like, we live in Australia, which is a small market relative to the rest of the world, and I've been fortunate to work in tech startups, work in small family businesses, and also large multinationals, and all the innovation, the productivity, the economic growth, as a general rule, came from those smaller businesses because they need to innovate, they need to think differently, they need to find ways to provide a value add to the consumer. Whereas, again, general comment, but larger businesses have already got that ingrained market share, market brand equity. When I was at my large business that I worked at, we spent 90% of the time talking about how we could protect our existing market share. When we're at the small startup, the small food manufacturer, how do we just grow? How do we create new products cheaper, do it better? And so we need to, when you look at fintech, need to create ways where these new innovative products come in, because that's creating greater choice, greater options for consumers, but also reducing cost and reducing the cost of doing business, we were talking last night at dinner about CDRs and giving options to consumers, and particularly those that are the most vulnerable, that don't have the time, the money or the expertise to know what options are out there. I remember growing up, we were with CommBank because they had I think it was the Dolomite program. So many people will stay with their same bank and mortgage because it's just what they've always done, or it's what they got at school. And we need to make it easier for them. And so how do we as regulators, legislators, create a framework to allow those small startups to flourish, because then consumers and businesses will benefit. I need to also say it's good to have Anthony as an Adelaide supporter here, given I'm a Collingwood supporter. Sorry, I just had to get that in.
Well, that's raw.
I told you this was going to go rogue. But we won't talk about the Swannies this year because they've already had an early mark. Anyway, maybe a question for you, Richard. Based on your experience both working, I guess, within banking but also within startups and technology, what are the biggest reasons that you've seen as to why, sort of thinking a little bit more broadly than just perhaps shared technology, but also other partnerships, what are some of the barriers and reasons why these large institutions just really struggle to partner?
Well, I think it's, I'm going to go rogue on you. I'm about to warn you.
Go do it.
No, look, I think the short answer to that question is inevitably it's about risk, right? Especially if you're in financial services and you're running large regulated institutions. You have questions about the counterparty, and you're being mandated by your regulator to ensure the the risk in that respect is managed. So there's always a question of, is the product real? Is the team going to be there in 5 years, right? Do they have all of the compliance and other processes in place to meet the thresholds that I'm being regulated around? Now, I have a personal view, having been both at NAB and at a couple of fintechs, that it's actually easier for a fintech to comply and put in place many of the rules, processes, and capabilities that a regulator would expect, compared to the complexity, the legacy, and the scale that a large institution has. It's just that the large institutions have been, have the runway, the capital, and the team size to be able to respond to sometimes regulatory barriers that or hurdles that have been almost designed around them, rather than enabling agile or more nimble organizations that regulators can sometimes be a little uncomfortable around regulating directly. But I did actually want to go back to the point that you were making about shared infrastructure, because we actually have a really proud tradition here in Australia of building shared infrastructure, right? We have Indu and Cuscal and
Payments.
and ASL, who started primarily off in the payment space, but also do a lot of other things, right? So I think that there's a really good tradition here and elsewhere of effectively mutualizing the technology investment and doing that for the greater good, right? But you have to have leadership and trust to put those initial entities together. I think you also, just picking up on the Connect ID experience. So for those of you who don't know, Connect ID is a digital identity proposition that the 4 banks have put together, now together with Telstra, and I helped take that from PowerPoint to live. And one of the things that we were constantly challenging with is the fact that we were actually trying to work together as 4 major banks, to get legal dispensation and agreement, this wasn't anti-competitive behavior, et cetera. But again, I think that that's a good example of where, if there is a common interest, that common ground can be found. And open standards are a big enabler to that. Last point, though, before I turn it back, is I think it's also a huge space for opportunity for fintechs. So Opti is a fintech that enables 150 different payments integrations to be absorbed through a single API, right? So we take that complexity and actually use it, has created a business opportunity around that by effectively creating a shared technology platform that allows merchants and processors access to 150 different payment types, but without the complexity of doing that all themselves.
Excellent. So if I'm understanding you right, you feel like if there is a will, there is a way. It's just often there's not
The will.
Well, there is often a way, but I'm going to say that, the incentives and rules have to be set up appropriately, right?
Yeah, I mean, you're right, the incentives and rules, and one of Richard's earlier points that links to this around risk, and one thing I'm conscious of when we come to legislation, but also when you look at regulators, it's very easy to regulate on the risk side in the terms of, we're dealing with some cases all the time, I won't name them, but if someone gets scammed or someone does the wrong thing, that is a tangible cost that can be captured, measured, hits the headlines. What is intangible is the economic growth, the productivity, the opportunities that are lost from that over-regulation. So we have this world where we're sort of incentivized in many ways to, inverted commas, protect people because we can't capture that upside, and that leads to this world of over-regulation, and then you put more on top of each other thinking you're doing the right thing, and then suddenly no one can do anything, and we have a productivity crisis that we're living today. So that's, I think, something I'm really conscious of. How do we move the conversation beyond the tangible, while always protecting people, but understanding every piece of regulation has a cost on the other side around innovation and growth and productivity.
Yeah.
Can I give a really for for those of you in the room that partner with larger ADIs and insurers, there's two new pieces of legislation, or actually it's not legislation, it's APRA standard, called CPS 230 and CPS 234. What we do for those organisations is quite extensive outsourcing of digital origination as a vertical. And seeing the level of obligation on us at a third and fourth line oversight perspective, i.e. our obligations to oversight see many organisations beyond us, about 22, is extremely extensive. I have a team that do that. Not every startup fintech can afford a team to do that. So I think, Aaron, if we could give you a takeaway on this point, it's actually from a regulatory perspective and a government accountability perspective, it's actually that I think it's going to be really important that the regulatory framework that APRA actually executes with respect to right-sizing regulation across the tiers of the banking industry really isn't just a capital required perspective, it's actually also a framework that looks at all of the other regulatory layers, including being able to trust organisations like ourselves to actually take on some of those responsibilities, but in a way where we're doing it much more efficiently than we have to do today, which is effectively per institution to more of a holistic perspective. Because if we come, or any other infrastructure, yours, whatever, comes with a level of certification that takes that burden off the ADI specifically, cut the payment spaces where this is done before actually, but doesn't actually make us become regulated, because then actually our ability to innovate is lost and be valuable to the industry, then I think we are taking a step forward in that respect. But where it sits today, I would not start timely because of the cost and time to get to the scale that we're at, which is actually where we need to be to meet all of the obligations we have and expectations we have on us, and also just the cost of technology, which is the reason for my passion for shared infrastructure, is that the cost of building the capability, AI doesn't actually make it cheaper. It actually makes it more important to be shared, because it actually needs scale and lots of data to be good. So I'll stop there.
Yeah, no, look, and I'll throw to you, Aaron. I know you've got something to say, but essentially what that means is, at the moment, if you were a new fintech or even a newish fintech that's still, yet to scale, you could not make it through, and it's not a feasible option for you, which is a real worry.
I think it's harder.
Yeah.
I think it's lower probability and higher risk.
Yeah.
And just at a practical level, so the coalition, we've got Senator Andrew Bragg as the Shadow Minister, deregulation in his title, because we recognise that. I'm also on the Economics and the Corporations and Finance Committee, and Corps and Finance, we obviously have oversight of ASIC and speak to them regularly, and so this is some of the conversations we're having with them, and also as part of the Economics Committee, we're looking at reviewing, as we do every term of Parliament, the big four banks, and I think it's an important time to review the banks as well, given we're sort of 4 or 5 years post the Royal Commission, and what are some of the unintended consequences that we might have had, and that's the key mindset, I think, continuing to review the new regulations, the new legislation. What are the unintended consequences? Are they working? Are they not? So we'll be following that one up.
Yeah, I was wondering about that. Do you have a sense is there any chance in hell that there will be the opportunity to perhaps right-size some of these regulations, Or do we need to start thinking about other ways that we can actually help solve for it, whether it's, more sandboxes or, ways that the the private sector is actually going to be able to have to set up incubators and NAB labs and like anything to try to help get these smaller guys up and through.
Well, I think sandboxes have a great place but particularly around new technology. So I know Senator Cruz in the US is talking about an AI sandbox. So I think they have a place, but if I'm honest, that's kind of a short stop for new technologies. Is there a place for deregulation? There has to be. Because look at the productivity numbers, look at the economic opportunity. We as a coalition, in my opinion, need to lead the conversation and really lean into finding, not go too far, because regulation exists for a reason. We need to protect consumers. We need to get the balance right, but it's an opportunity for us when you look at the economic space to really show some examples that of the unintended consequences of what, it's all good intention, but also that the reason parties, and politicians, I believe, need to look at this holistically is that ASIC and APRA and others will look through a very narrow lens of what they're trying to achieve, and which is to keep people safe within their parameters. And it's our role, in my opinion, and particularly on the committees I'm on in economics and in this space, is to sit above and go, well, what is the bigger picture? You might achieve what you're trying to achieve, which is A, but the role of a leader is to understand that you've got to achieve A without impacting B, C and D. And so that's where I think we have to lean into it. The economic data and the lived experience is showing us that it's gone too far the other way.
Yeah, absolutely. I was reflecting on something that Dom Pym said up on this stage earlier this morning, which is around the fact that Bendigo Bank has actually made some early bets on fintechs, which you're very familiar with, and has done well. So clearly it can be done if people want to do it, whether that's through shared services or partnerships in general. But I'm wondering, Anthony, is this integration challenge actually about technology and regulation as much as it is about people and politics and culture?
My personal opinion, and we are fully integrated via API into Bendigo's core banking platform. So you'd have to suggest it's the second, not the first of those two. And I think it goes back to the challenge that historically in the Australian market, the industry has built in-house on some third-party technologies, but built in-house most of its technological needs outside of the payments infrastructure. And so within all the organisations, there are a lot of jobs, a lot of careers, a lot of reasons at a personal level as to why there is a bias to continue to do that. But for the customer and for the shareholder, I really challenge whether that makes sense, but how does an organisation break through that conundrum? Yeah. Because, we're a B Corp, and a B Corp considers all stakeholders in its decision making. So the impact on those people is a consideration in the decision making. But as an economy, productivity, as a consumer, competition, good products and best products and services that are available, on an overall balance perspective, I think it's a challenge the industry needs to overcome.
Yeah. Look, it's a hot potato I won't unpack in the remaining 2 minutes that we have left, but one that I think is relevant to touch on nonetheless. Richard, we've only got time for one or two more questions, but we've spent a lot of time talking about what's wrong with the regulation, what are the challenges within the large, incumbents and institutions, but maybe from a fintech perspective, is there anything that you think fintechs could be doing to either increase their chances of success or do things better or differently? Let's problem solve from all angles.
Yeah, look, there's certainly a number of things. I mean, I think it depends on what your fintech is, what it does, and how it intends to partner with a large enterprise or financial institution, and what it's seeking to get out of that partnership. Sort of a quick list of tips I would probably share would be one, if you don't have a fully functional product yet, then you probably need to be talking to the venture arm, right? The high risk, the units within the financial institutions that have been carved out to support higher risk propositions rather than trying to sell directly into the core of the business. I think one of the other observations I would make from both my time at NAB as well as at Fintechs is that if you have a proposition that competes directly with the core business of the financial institution, you probably need to be clever about how you position that in, right? You go after a core segment, right? Like if you're a regional bank that trends older, right? Go after a smaller, a youth segment and build something like Up, right? Worked really well for Bendigo and Adelaide Bank. I think the other thing to think about as a fintech is your runway and the kinds of conversations that you're having both with your partners but also with your shareholders about what a strategy that involves a long sales cycle and a long development cycle means, because you want to be fully transparent with your financial institution partners and really understand the people and the process that they have on their end, but at the same time, that conversation needs to be ongoing with your shareholders so that they know that the capital that they're providing is going towards building the timeline to execute that strategy successfully.
Wonderful, thank you. And look, we are right on time, so thank you all so much. We've covered a lot of territory across regulation, culture, technology, startups, incumbents, and everything in between. So thanks so much.
Thank you, Carla.